All right, everything looking good. We are live. Let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our Friday morning market update. It is 11 a.m. Eastern Standard Time on Friday, 10/21/2022. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so we got a little bit of volatility in these markets. We're seeing some volatile moves in DXY, TNX, a couple of earnings stocks coming out here. We saw a big push down in Bitcoin, got bought up pretty aggressively. So let's jump in and take a look. Obviously, the big talk, the big loser, the biggest loser of the day, at least so far, is Snapchat. Down about 30% on earnings miss, and honestly, it wasn't even that bad. So it was not that bad in comparison to what it could have been. So very, very interesting, but we will see. We'll get there in a minute. Let's go ahead and take a look at what's happening in TNX right now. So, we're seeing a sort of mixed tape right here because we're putting in cycle highs. We gapped up today, put in a new cycle high, and then we sold off from that gap up, just back down. But what did we really do? We just backfilled it. And then about half of that got bought back up. So we're up here at about 4.29. I'm sure you have noticed by now, Fed funds futures is now pricing in 5%. We set it way back when rates were still around zero. The target was 5%. And now here we are approaching 5%. The market is now betting on 5%. So, I mean, realistically, we're very close to 5. So it's time we start talking about 7.2. And we're going to keep setting our targets higher. And you're like, well, you're moving the goalpost. Well, yeah, that's what you do. You move the goalpost because you don't want to just sit here and say, I'm thinking, Fed fund rate's going to hit 10% when we're at 1%. Sounds crazy. You lose all credibility. Set targets on the way. As you tick those boxes, continue to look for support and resistance. And right now, the truth is, yields are going higher. Countries around the world, Federal Reserve, central banks, they're raising rates to combat inflation. Right now, inflation is the number one issue on these central banks' minds. So until inflation comes down, and we know that obviously job numbers are tied directly to inflation, so until job openings go up or employment goes down, we can expect them to continue raising rates. So if you look at your data in the morning and you look at that data and you say, okay, let's take a look at inflation. Oh, still bad. Let's take a look at employment. Oh, still way too many job openings or way too many people employed, etc. However you want to look at it, way too low of an employment rate. Fact of the matter is, nothing has changed. So until we see some kind of actual pivot, and I don't even just mean a slowing of the tightening, I'm not looking for anything to change in these markets, and we're not seeing any kind of price action that leads us to believe that anything is changing. So as far as I'm concerned, today is the highest high we have literally put in yields, going all the way back, and we can't even see it on the daily chart. We have to switch over to the weekly. This is the highest high we have put in, going back to 2008. We have broken out of a clear, defined downtrend. So as far as I'm concerned, nothing remotely telling me we're seeing a top in yields. There's no divergence. There's still positive momentum. We broke out through a key level, consolidated above that level, and now we're surging higher. The weekly is going to look very, very bullish when this closes. The monthly, I mean, again, very strong. Still have 10 days left in this month, but, breaking above this key resistance level. Next target up here, probably the 1.236, and that's about 5.3. We know the real target is 5%, 5.2, and then eventually, the next key fib level is 7.2. So when we were at 2.6, 2.5, we sounded crazy, talking about 3.8 and 5.2. And now here we are at 4.2, and the market's pricing in 5.0. And now it's like, oh, we'll never get to 7.2%. Same people who said we can't get to 7% or will say that are the same people who said we can't get to 5%, same people who said we can't get to 4%. So they're wrong. They're wrong over and over again. They're losers, and they're so good at losing that no one even expects anything different anymore. I know for me, when I see these people and I'm like, oh, look, they're still wrong, I'm not like surprised. I'm like, oh my God, it's so crazy. They're just wrong over and over again, and they never change their view. They just stick to their guns of wrongedness. Okay. So anybody saying they see a top or something like that, where? Show it to me. Maybe I don't understand. Help me to learn. Because everybody just seems like a bunch of morons right now calling for a top over and over again when there's no signs. So U.S. oil, I see weakness right here. We're below the 200 exponential. It has a negative slope. We're below the 200 simple. It has a flat slope, which means if we stay below it, that too will be negative. This is the beginning of a bear market. Oil is officially preparing to confirm into a bear market. Does it have to happen? No. What has to happen for oil not to take a big shit, to just dump, to go down into the 70s? What has to happen? Well, it needs to get above the 200 exponential and simple moving average. So what's going to make that happen? Well, we need more demand or less supply. So OPEC is trying right now, and this is a real-time example of what I talk about. You know, a fight between the bulls and the bears, or market makers, or whales, etc., etc. OPEC is essentially a market maker for oil. So right now, the oil market, aka the charts, the futures, whatever you want to look at, in this case, we're looking at U.S. oil, CFDs on WTI crude oil. When we look at this chart, we know, hey, a bunch of market participants, savvy investors or speculators, look at the charts the same way we do. We didn't invent it. We're just mastering it. So they're all looking at the same thing we're looking at, and they're saying, oh, this is about to go into a bear market, and we're going to see some further disgusting downward price action in oil if we don't reclaim these 200 moving averages very quickly. And the first step to doing that is to cross the 8 and 21 back to the upside. Well, we did that and got rejected, and now we had the bear cross again. So when I look at this chart and people say, well, OPEC's not going to let this happen, OPEC's not going to let that happen, I mean, I see clear as day. Sure, OPEC's going to fight its best. It's going to cut supplies as good as it can. It's going to, give out that guidance and threaten and scare and try to move the markets. But the fact of the matter is, just because OPEC is a giant cartel, just because they control the supply of oil, does not mean they control the markets, the actual markets. So we're going to see right now who's stronger, OPEC and those that have a vested interest in oil prices higher, or the entire rest of the market. What is my opinion? I don't think we're just going to drop down right now back into the 70s, immediately for no reason, but it makes sense. If we literally bounce from a lowest low of the cycle and back tested and put in a lower high and back tested a key moving average and got rejected, it makes sense that we're coming back down here to sweep the lows. And then, eventually, if we go low enough, which likely after we put in, a high, a low, a lower high, a lower low, a lower high again, you could argue here was a lower high. Doesn't matter how you want to look at it. The fact of the matter is we're in a downtrend. We're trending down and getting ready to confirm into a bear market. Not crazy for me to think oil's coming down here to retest 76, possibly even put in new lows. And you guys know my inevitable target for oil for a potential bottom is somewhere in the 60s. And, same exact thing. We're up here selling at, 140 to 120. And everybody was saying how oil was going to 150, new all-time highs, 200, 500, crazy shit. And then here we are at $84. We're just down here in the 70s. We're ahead of this thing every step of the way. And that's what we're going to keep doing. We'll just keep doing the same thing we've been doing, because you know what? It fucking works. So here we have the VIX. We're back inside of that triangle. Obviously had a clear breakdown. Still put in a higher low. That's why it's so damn important to not only look for higher highs and higher lows inside of the actual triangle, but even after we broke down from support, we were looking at this yellow level because we said, okay, that's great. We broke down from support. Sure. But do we take out that previous swing low? And the answer is no. And then here we are up here and we come up and we actually took out this previous swing low, swing high rather, right here. So this is what we're looking for. You know, these couple of swing highs right here on the VIX, we're trading at 30. I mean, that's pretty damn elevated level for the VIX. We're trending upwards. We have a low, a high, you know, higher low, higher high, consistently just putting in lower highs and lower lows. Now we have a consolidation that has turned into a triangle right here. So we haven't necessarily been taking out the macro highs right here, but we know what this means. If we burst to the upside right here, if we get this, you know, rough measured move, it takes us up into the red zone for the VIX. And we know once we're up here above, like, you know, 44, we got up into the 50s, 60s. We're talking about doing stuff that we have done, you know, once or twice in history since, you know, we had these measurements, since we had these charts, since we had these data points. We know what that means. That's a capitulation event. I expect heightened volatility to remain going into the future. Dow Jones. So Dow Jones Industrial Average, you know, we just put in a new cycle low, so that's bad. We're trying to confirm the 821 cross back to the upside. That's kind of good. I mean, it's still very much a bear market, but at least there's some life from the bulls. They're not completely dead right now. We do have a higher low on our histogram, on our indicator oscillators, and that corresponds with a lower low on price action. So some bullish divergence playing out currently. Now, how high is that going to take us? Well, we'll see. We will see. We're at key resistance right now. It was support. Now it's resistance. We turn on our drawing tools here. We could see a back test of the 236. Seems likely. Another $800 to the upside. Does it happen now? Does it happen never? We'll have to wait and see. But we hit our target to the downside literally within a couple bucks. So it makes sense now we will back test the previous key level. So if the 382 was our target down, we back test now the 236 at acts as resistance. We get rejected. We go back down to the 382 and then, you know, continue to just slinky theory our way down. Continue to put in lower highs and lower lows until we don't. And when we look at, we have obviously our weekly is wrapping up today. When we look at the weekly chart right here, what is this? Is this super bullish? Is this just hanging on by a thread? I would say that we are preparing to print bullish divergence on the weekly. You know, we still need one more green histogram, obviously, but looking like we have a lower low on price action and a higher low on the indicator oscillators. But, you know, what is that telling us? What is bullish divergence on the weekly in a bear market telling us at the 200 moving averages? Is it telling us we're going to reverse the trend right now, or is it telling us that we're likely to see a little bit of continuation on this dead cat bounce before we go lower? I would say probably the latter. Now, we don't know for sure, but as long as we're putting in lower highs and lower lows, it doesn't look good. Now, on the weekly chart, we're back above the 200 exponential and simple. The slope is to the downside. We reclaimed those levels. We got rejected. We got sort of like a rejection indecision candle, and then we're able to basically gap up here and then gap up above 30K and then have a little push to the upside. Now, that's a good sign. That's a good sign. If we close above the 8 on the weekly, we'd likely retest to 21. That's 31,300. Well, now we're pretty much to our target we were just talking about. So now suddenly we have the 236 lining up perfectly. You know, our key fib level lines up perfectly with our key moving average. So what's the likelihood that we're going to 31,300? I would say extremely, extremely high because we have some serious levels of confluence there. Now, after we go there, what happens? Do we burst to the upside? Do we go to new highs? Well, we still have a lower high. So until we get above 33,700, this chart is still a piece of shit. It still is crap. We're putting in lower highs and lower lows. So we still got a ways before we even get excited about this. You know, 10% move back to the upside. And then what's going to happen? You know, let's say we do get a push up here and start threatening these highs. All the retards are going to get on the wrong side of the trade. They're all going to get bullish up here right at the top again. The same way they got bearish down here when we lost the 200s at the bottom. They're always one step behind. And by one step behind, I mean one meaningful trade behind. Because they're always on the losing side of every single trade. Because they're losers. So weekly looks okay. I mean, we broke down to the 200s. We found some support at those levels. And now we're just hanging out there. So we're hanging out at support. So we're not putting in new lows for, what, 3 weeks now? That's good. That's a good sign. We didn't put in new lows on the Dow Jones for 3 weeks. Congratulations. We're bullish now, right? No. This is exactly what we said at the end of last month, before this monthly candle opened. We broke down from support right here, come down to a new low, and then we expect a back test of support. So here is our what was support now acting as resistance around 30,700. So look for a monthly candle above 30,700. If it doesn't happen, it still looks like death. If it does happen, okay, we reclaim a little bit of support. Now let's start talking about the 8 and the 21 moving average. These markets still look like trash. There's a little bit of signs of life on the daily and weekly time frames, but they still look like trash. This to me looks like desperation. It looks like people that are vested in these markets. They're invested. They have a serious reason for these markets to go higher for, their own interests. And they're willing to do anything they can, including using other people's money to buy up markets that are consistently trending downward. Now, do you care? Does it matter? I mean, arguably, no. So what does matter? What does matter is we have to start building some constructive price action right here. And, it's not happening. We have the indicator oscillator trending all the way back up to the bullish control zone from the bearish control zone. When we left the bullish control zone, we were at 34,130. And we were roughly at, 90 was around where we peaked. So when we came down from 90 to 80, we started this little sell-off right here. By the time we hit the bottom, we were at 7. So we went from 90 all the way down to 7. So we went from the, top of the range to the bottom of the range. And we went down from 34,000 down here to, 29,000. And now here, the stochastic has trended back up almost to the bullish control zone. It's at 70 now. Bullish control zone starts at 80, obviously. So we're almost back to where we were. But look where the price action is. This is where we were when we were at 90. This is where we are at, roughly 70. So we're using all this energy to get back up. And where are we going? We fell off a cliff, and then we climbed back up out of the hole that we made when we landed in the ground, like an old, Wile E. Coyote Roadrunner cartoon. We just crawled out of the hole. We used all our energy to crawl out of the fucking hole, but we're still at the bottom of the cliff that we just fell off of. Congratulations. That's so bullish. We used up all our energy not to be in the hole, but we still fell off a fucking cliff. So we're going to need a jetpack. These markets are shit. They're total shit. It's desperation the whole way down that we'll be buying. Things don't just go straight to zero. They step down like this. Everybody thought this is the bottom, this is the bottom, this is the bottom, this is the bottom. So of course they think this is the bottom. Nobody thought this was the top, this was the top, this was the top. Matter of fact, the only people that were talking about that shit are right here on this microphone right now. Now, are there other people on planet Earth that were calling for these moves? Sure, for sure. But let's go ahead and eliminate 99% of those people because they're always calling for those moves. That's the biggest difference about right here on this channel. Difference between me and everyone else, or majority of people, is when the facts change, I change. I don't really give a shit. Nobody's ever like, oh, you changed your mind about this thing that you said before. Okay, sure, I did. Ask me why. Well, why did you change your mind? Because the facts change. Oh, okay. Well, that makes sense. Congratulations. So SPY looks exactly the same. I mean, we came down here to the 382. We're finding some support, trying to reclaim these levels. We're at resistance. We're building some strength. We have some bullish divergence. But really, what's really happening? We're just hanging out at the moving averages, which is good. We don't want to not be hanging out at the moving averages. We don't want to break down through them and just start, shit in the bed. We don't want that. But we're not just bullish now. I mean, short term, obviously, we're bullish at support. We've been talking about the move back up, the back test of the breakdown, the back test of the moving averages on the monthly. The automatic buying that comes in when we tag a 200 on any significant time frame. Sure. But I mean, is it just a dead cat bounce? Of course it is. Of course it is. Until it's not. And here we see, obviously, on the S&P on the monthly, what did we do? Oh, look, we broke down from support right here, came down, put in new lows, we bounce back up, look where the wick comes up to, we back test support as resistance, and we get rejected. So does this monthly candle look bullish, or does it just look like, well, we entered into a bear trend, we broke down from support, we back tested, it got rejected, that's an SR flip, and now we expect to go back down lower over the next couple weeks or months. Well, what about the Santa Claus rally? I'm counting on it. We need it. We need the Santa Claus rally. What the fuck's wrong with you? Why do you hate markets? Well, I don't. We don't have to get a Santa Claus rally. I mean, it's a thing. It's obviously a thing. Turnaround Tuesdays are the thing. Every Tuesday, I don't just wake up and, get excited because I'm like, oh, today's the one. Turn around Tuesday. I mean, because it rhymes, right? Santa Claus rally because, it happens sometimes. I mean, come on, guys. Markets are dumb. As long as the markets are still acting like fucking morons, expect their money to get taken. So whatever the morons are doing, I'm not saying we should always counter trend everybody else, or counter trade everybody else, but I mean, god damn if it's not working. Triple Qs, just put in new lows. They were like, we haven't put in a new low for 5 days. Sure. And we're also back below the 8. So does it seem more likely if we're below all the moving averages, we're getting ready to put in another new low? Or now suddenly we're going to put in a new high? Well, it's an easy answer. Until we close above some moving averages, the market looks like shit. So QQQ, triple Qs, looks like shit, obviously. IWM, the Russell, did not put in a new cycle low right here. Sort of put in like this double, triple bottom. That's a good sign. Now, granted, obviously, you know how I feel about the Russell. It's trash, but, at least it doesn't look as trashy on the daily. Now, on the weekly, it looks like a complete, dumpster fire. It looks like back in the old, 90s movies where, they pull, the ding-dong ditch. They take, some dog shit, put it in a paper bag, and, light it on fire and put it on somebody's porch. They come out, they stomp on it. Oh, stepped in the shit to put out the fire. That's what the Russell looks like. It looks like a flaming bag of dog shit. Below the 200s, 200 exponential, red slope, 200 simple, flat, clear rejection, weekly candles looking like trash. This looks like fucking desperation if I've ever seen it in my life. Who's coming in here buying up these trash garbage companies in the Russell, praying to God, hoping that they push back up here and that they lead the markets back out of this clusterfuck of a bear market we're in? I mean, dumbass people. That's who's doing it. Dumbass people. They're buying the worst stocks in a bear market. Well, why would anyone buy the worst stocks in a bear market? Because they expect them to outperform. So that's it. That's it. Well, historically speaking, small cap shit stocks, lead us out of recession, aka growth. Okay, sure. All right. Have fun buying the trash and then it gapping down 30% like Snapchat did today. Congratulations. Congratulations. You lost 30% in record time. And I don't hate Snapchat or anything. Honestly, I think it's not going anywhere anytime soon. But let's be real. There's a difference between a stock, a company, and, the actual value of that stock or company currently. IWM, Russell, looking like trash. On the monthly, looking like trash. Bouncing the 2018 levels. Clearly in a bear market. Just put in a new monthly low. Bearish control zone. All red histograms. Red slope line. Trash companies. Brain dead retards buying it up left and right. I'm an investor. I am investing. Okay. All right. XLE Energy did take out the high. Obviously, that's a good thing. Looks like we're coming up here to test the previous highs. You guys know how I feel about this. Very bullish on energy long term. Short term, though, very bearish on it when this turns over. 200 simple on top of the 200 exponential. Oftentimes, we see that before a big push up and a macro top. So is energy macro topping? We don't know yet, but sure looks like it to me. XT. It doesn't mean we don't go on to put in a new high before that happens. XTN transportation. And if you're like, oh, I'm bullish on energy and you're wrong. Okay, let's say I am wrong. Let's say I'm wrong about energy and we just go into this just massive, just surging energy, let's call it we'll call it a bull run, but we'll nickname it energy crisis. Because, obviously if energy prices keep going up, sure, energy isn't a bull run, but it's a fucking global crisis. So let's just say the bull run energy global crisis continues and I'm wrong. I'm dumb and I'm wrong and I just don't understand how energy works. Well, what does that look like for the rest of the economy? What does that look like for the world? What's that look like for productivity? Well, when the input costs go up, that we either have to charge more money, which everybody's mad about, obviously because of inflation, or there's just less demand. And then we slow back down and then eventually the prices come back down and the market, evens back out. So either fucking way, okay, energy goes surging into a bull market and the energy crisis continues. Well, that's really fucking bad for the economy and the world and just people in general. Okay. So that's really shitty. So energy surges, that's really shitty for everything. Okay, so that's bad, obviously. What if energy just, rolls back over right here, tops out, and then comes back down? Well, that's also really shitty. Because why is that happening? Well, because the demand is not keeping up with the supply, which is what OPEC's trying to do right now. They're trying to curb the supply to make up for the lack of demand. Well, why is there a lack of demand? Well, energy prices are expensive. So what does that cause? A slowdown in the economy. So if energy prices go up, it's bad for the economy. If energy prices go down, the economy is telling us there's something bad happening, and that's why energy prices are going down. So in my opinion, either way energy goes, up or down, regardless, it leads us to the same fucking place. And where is that place? Well, close your eyes and just picture it with me, okay? It's the future, all right? Things are pretty much the fucking same, all right? But there's a couple different things, but they're pretty much the same, okay? And now, I know, you're fully just, taking in your surroundings. There's not flying cars. There's not green energy. There's not all this stuff. We're not that far in the future, okay? We're just a couple years in the future. You look around and everything fucking sucks because energy either went into a massive bull run and crushed the economy, or energy rolled over and the economy said, hey, the reason energy prices are cheap now is because everything rolled over. So which one is better? Is it better if energy tops out short term and comes back down and people can afford it again? People can stay warm at night. People can buy gasoline and go to work and shit. Is that better long term? Yeah, that's way, way better. The recovery from that is much better. What about the other scenario where energy just keeps surging, goes through the moon, we go to new cycle highs, all-time highs, whatever? I mean, I don't think people like that future. So if you're betting on that future, which is okay, you can bet on shit you don't like. If you're betting on that future, understand that when you're right, what the world looks like. And that's okay. That's okay. Just understand that. So you're betting, if you're betting on energy right now, you're betting on a really fucked up future for the next few years at the absolute minimum. And it's going to be really, really shitty. So make sure everything else you're doing in your life aligns with that as well. And that's energy. Very, very bullish on the weekly. Fairly bullish on the monthly. We did just get the hard sell signal though. Oftentimes after you get the hard sell signal, we get another big pushback up here. People exiting their positions. We're obviously at elevated levels. Could energy keep surging and go much higher? Could we see it back here at new highs above $100 and just blue sky breakout? 100%. 100%. But again, just understand, picture to yourself, draw a mental picture or an actual picture if you have, artistic skills, or maybe you just feel like drawing. Go ahead and do that and then just see if you like that future and if that seems more or less probable. Does it seem like politicians are more or less likely to allow that future to happen? Like the Mad Max future. So if you're betting on Mad Max, that's great. I love that movie. But understand that that's what you're betting on. So transportation, obviously looking like shit. So transportation telling us something as well. Oh, all we heard the whole pandemic was how, a shipping container went from, $3,000 to $30,000 to ship across the ocean. Well, now they're $3,000 again. It was ridiculous amount of money for trucking freight or, train freight or air freight or whatever it was. And now it's back to regular. Well, not quite on the air freight, but, and obviously you see UPS and these other companies, Postal Service, raising some prices or whatever, 10%, etc. Sure. I get it. People are making 10% more money. Gas costs way more than 10% more. It makes sense that all these things would go up in price. So what's happening with transportation? Well, we're seeing transportation, essentially falling off a cliff, topping out. We know every other time that's happened with these big cyclical moves in transportation, we went into a long consolidation period and capitulation, or some form of that. And that's exactly what we're doing right now. So does it make more sense that all of a sudden this is just bottomed out and everything's fine again, and then transportation just starts booming? Or does it make sense that, hey, the reason transportation is looking like shit right now, the reason this is falling off a cliff, the reason this is in a bear market, the reason we're seeing the end of another cycle is because the prices got so high that it killed demand. And then people didn't have money to buy the stuff that needs to get transported. Therefore, the prices on transportation come down. Holy shit, this sounds a lot like energy. Wow, that's really weird. Huh? It's almost like We use energy, transportation, semiconductors in some like strange way to benefit ourselves. And then when we couple that in there with the yields as well, well, we just have a full picture now, don't we? And obviously I'm referring to, my version of the four horsemen of the apocalypse. I know now, I didn't like invent that term or anything, obviously. I didn't invent that in markets, but it is funny that we've been talking about that for like the last year, and now like everybody and their mom has a four horsemen of the apocalypse. It's like, oh, it's these specific stocks, or oh, it's this country, or oh, it's how big the moon is, whatever all the bullshit people come up with. But mine actually makes sense. If we see the cost of money go up, that puts stress on the economy. Well, what's the cost of money? Rates? Oh, okay, that makes sense. So if it's more expensive, aka you have to pay people more interest to borrow money, you are less likely to borrow as much money, or more likely to borrow less money. AKA, it slows the economy, it slows investment, it slows productivity. Money is expensive, productivity goes down. Bad productivity comes out, aka shit companies that don't make a profit. They go bankrupt, they go away. And then good companies get stronger. And all the people that were working at those trash companies that shouldn't exist go and get a job at a real company and actually serve a purpose. And, that's part of the cycle. So as long as we see the cost of money, we know how that affects the economy. We see the cost of energy, we know how that affects the economy. So if rates go up or energy prices go up, we know what that means. It means the economy is fucked. And I'm not talking about like, oh, for a couple months while we just kind of like, shake out some of the bad investment. I'm talking about actual fucking recession, depression, downturn, like real slow growth. And you're like, well, all we need is just bailouts. As soon as the Fed pivots, everything goes back to normal. Well, we've already learned in real time that when we turn off the car, when we shut down the engine, when we close down the economy, we don't just start it back up, okay? The governments, the people in charge, the 1%, the whatever you want to call them, they close down the fucking economy worldwide. And look at what we're in. We're now almost 3 years later, and look at the shit condition of the world. Look at the shit condition of supply chains, of the globalization, of input costs, of labor costs, of, look at poverty, look at all this stuff. So we know, obviously, that we can't just turn shit back on. It doesn't fucking work like that. We can't just restart the car. So we know there's serious pain coming. Serious pain coming. And you're like, well, it's already here. It's already priced in. The markets are forward thinking. Okay, sure. As long as the markets are pricing in serious pain because of the increased cost of, energy and, money or investment capital, as long as they're pricing in what's happening in transportation, as long as they're pricing in what's happening in semiconductors, as long as all that's being priced in right now, I guess, yeah, sure, the market's forward looking, so that's it. I guess we already bottomed then, right? I mean, semiconductors go in everything. We need them for everything. This whole entire pandemic, this whole entire last 3 years was about semiconductor shortages. It was all about, the narrative for the last so many years was, this is all supply chain shortages. Partially true. The supply chain shortages were definitely an issue. This is all about money, printing money. Definitely partially true. Normally what would happen, let's say without all the government intervention, what would have happened? Well, we would have went about our business, some people would have got sick, and then, the world would have kept continuing on. People would have died. It would have been terrible. Okay. So what about with government intervention? They lock everything down, they shut it all down, and now we're fucked years later. That sounds worse to me. I think if the government didn't intervene, we probably would have been better off. Why did the governments intervene? Why did everybody freak out? It was control, it was conspiracies, it was whatever. It was probably just because all the people in charge are old fucking decrepit bums that are overweight and fucking, look like shit, don't exercise, like toxic fucking people. And they probably got scared of COVID and didn't want to die. That's probably what really happened. Okay, I don't think it was some grand conspiracy necessarily. I think they took advantage of it, never let a good crisis go to waste, but so the whole thing was based on these, essentially supply chain issues or money printing. That's what everybody said the whole time. And the fight was, oh, it's not supply chain issues. You're dumb. Oh, it's not money printing. You're dumb. The government doesn't print money. There's no supply chain issues. Well, I mean, it was definitely both those things. We still see supply chain issues to this day. Deglobalization, literally by definition, will cause supply chain issues. So we have this massive thing that's based on semiconductors, and now here we see semiconductors are falling off a cliff. Well, I thought everybody needed all these semiconductors. Why is the price going down? Why are all the semiconductor stocks crashing? There's literally thousands of cars sitting around that are just waiting on semiconductors. So why is this happening? Again, it's because we're seeing the demand fall off a cliff for these things. And you're like, yeah, but we still need them. Sure. But it doesn't mean that there's new orders coming in. You know, the orders come in, it might be months, it might be years before those orders get filled. So eventually it comes to a time where you're like, hey, I still need all the shit that I ordered before. People have paid for that. I'm counting on that. That's all, you know, priced into my business model. But I'm not going to order as much of the stuff that I'm going to need in 3 months or 6 months or 9 months or 2 years or whatever. So again, what are we seeing take place? Semiconductors go in fucking everything. The same way transportation moves everything. The same way that energy is used for everything. The same way that capital is required for everything. And that, my friends, is why we use these 4 things to tell us what is happening in the economy. Can we have a slowdown without energy prices going through the roof? Yes. But have we ever had a crash without energy prices spiking first? No. And that, my friends, is why we have a massive advantage over everyone else in these markets. XLU is next. The utilities, safety stock, hanging out at support. One of 2 things going to happen right here. And you guys know how I feel about this. The longer time we spend at a support level, the more likely it is to break. Now, do we just shoot back up here and reclaim this level and just go parabolic from here? I mean, it's definitely possible. But that wouldn't be my base case, okay? I'm actually bullish on a retest for energy back up to like 67, 68, potentially. If we woke up tomorrow, though, and I'm sorry, I might have said energy, I meant utilities, and utilities at 58, I won't be surprised. Consumer staples, we bounced to 382, literally perfectly to the penny. Back tested the bottom of the channel, got rejected. Seems likely to come back down to 382. Seems likely that we're coming right here. Now, we did hit our support level, though. We didn't quite get to the bottom of the level. We didn't quite get to the pre-pandemic highs. We didn't quite get to the bottom of the descending channel. Maybe that's the next push down here, though. And then we can look for a potential for like that 10% bounce. Obviously not really like tradable necessarily bounce. But realistically, I would expect some kind of support around this level. I mean, there's a lot of support for a lot of assets right now. So we don't want to get overly bearish on some of this stuff. But man, I mean, the big picture. People are like, well, it's already priced in. I don't know. Is it though? Everybody I talk to who's buying the dip, that doesn't seem like it's priced in then. I think if I'm right about what the future looks like, there's no fucking way it's priced in. Because nobody else is even saying the same thing. I mean, there's there's people, oh, this is the greatest depression ever, and blah, 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 and blah, 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 blah. But those people have been saying that shit forever. And they're going to keep saying that shit forever until literally like scorched earth scenario X plays out. So it'll never happen. You cannot listen to people or give credibility to people that are always bullish or always bearish. You have to find people or, create your own system that gives you clear indications when to be bullish and when to be bearish, or you're just going to end up in a cult. There's so many ways. You got to be real careful in today's society. You don't end up in a cult. An asset cult or, a religion cult or a money cult or a work cult or a, some weird ass shit that you probably shouldn't talk about cult. Like, everybody's in cults now. Be different. So DXY, obviously it's like, oh, this is terrible. Look at that rejection. DXY is going to 0. Yeah, I don't know. We just took out the previous high right here, which means we're there's one more previous high, and then we're at new cycle highs again. We reclaimed the 8 off like a 21 bounce. We put in another higher low. Now, could we roll over here and go lower? Sure, it's possible. This doesn't look bearish to me. It looks fine. It looks like a consolidation at the top of the range before we go much higher. We're one candle, any one of these candles, and then we're back at new cycle highs. We're one candle away. And I mean, the majority of it was right here. So we'll see how this week closes. Obviously, we're seeing some weakness in DXY. We're seeing some weakness today in TNX after it surged to new highs. Very hard for me to get bearish on anything that's not giving us signs of it. Like, could we sit here and say, oh, this is the top of the dollar and maybe be right? Sure. Probability of that happening, I think it's probably 1 in 3,000 or something. 10 years. So Tesla back down here at the 236, just hanging on for now. It's confirmed into a bear market at this point in time. Tesla is about to get wrecked. We know the next step down on Tesla is our target for the trade setup, 178, another $30, like 15%. Seems very, very likely that is in fact where we're headed in the very near future. So on to the magma. I mean, that liquid hot rock is flowing. Definitely some lava flowing down the mountainside here. I mean, Microsoft, new lows. We bounced off those lows, had a push back up, trying to reclaim the 821. There's nothing here. Bullish divergence, little push up. Oh, look, Microsoft still holding up better than most things are. I mean, the chart looks like trash. It's so easy to look at this and say this is a fucking trash right now. I mean, I don't know how people can look at this and not see this is not good. Look at this massive fucking bull market that went on for the last, over 10 years. And the whole time, the moving averages are blue and we're above them. That's what happens when it's bullish and we go parabolic. Well, what the fuck is this? We lost that trend. We broke down, we back tested, we got rejected, and we put in a new low since then. This is bearish as fuck. This is a bear market as it gets. Well, who cares? It's just one stock. Who cares? Okay. All right. So Apple still here at that support level, hanging around, bear market, holding up better than most. Middle of the range right now. We're equidistant from the top of the range resistance, the bottom of the range support. You guys know where I think we're going. I'll see you at 116. Maybe I'm wrong. $30 down on Apple. We'll see. And I could be wrong. That's why we locked in some profits already on that one. So Google down here at the lows, looks terrible at the 382, just hanging out at support. Looks ready for another capitulation, another big move down, $87, under $100 now. Congratulations, Google. Meta looks like trash, gap down today, just hanging out at the lows, the lowest low. The earnings coming out soon. What's going to happen. Well, it doesn't matter. It doesn't matter what earnings say. Here we got earnings, gap down, capitulation. So earnings are bad, we go down. Okay. What about here when we got good earnings? Well, we went sideways and then we went down. Well, what about here when we got good earnings? Well, we pushed up for a second, then we went down. Okay, what about here when we got bad earnings? Oh, we went down. Okay, so if the good earnings for Meta, we go down. If it's bad earnings for Meta, we do the opposite. We go down. Oh, wait, no. Okay, so just no matter what, Meta goes down? I guess. I mean, we're at key support right now, and they're like, it's already almost at zero, so... Yeah, there's some potential for a serious bounce off this level, but let's wait for some sign from the market. I mean, realistically, 118 looks like a really good buying opportunity for just to scout back up the back test of 236. Now, does it get there or does it just capitulate and go straight to zero? It could go either way. I wouldn't be surprised if tomorrow we woke up and it was like, whoa, Meta's at $63. What happened? I'm like, well, I mean, it's not like we didn't see it coming. It's trash. Amazon, again, still holding on. It has reclaimed that 618. It's well off the lows. When I say well off the lows, I mean in comparison to all the other trash that's literally at the lows. Amazon looks okay. Earnings coming out soon. Last two earnings were a miss. This one, we went down further. This one, we basically gapped up on the earnings miss. So what's going to happen on this one? Probably either going to gap down or gap up. And you're like, well, which one is it? I mean, I don't know. We're in a bear market, so looks like shit still. It just looks slightly less shitty than everything else. So congratulations, Amazon. Congratulations. Your farts smell slightly better than everyone else's, or just not quite as bad. Great. But it still smells like farts. So good job. Bitcoin dominance. I'm sorry, this is Bitcoin on the daily rather, Bitstamp chart. We had a little sell-off this morning, got bought back up. We're still below the 8. We're still below the 21. We're well below the 200s. Bitcoin looks like trash. It looks like complete fucking trash. Like when we can compare a Bitcoin daily chart looking at, say, like the last 6 months to an XRP chart looking at the last 6 months, and the XRP chart looks better, I mean, what does that tell you? Either how stupid people are in crypto, how good XRP is and how undervalued it is, or how shitty Bitcoin is. I mean, any one of those things. I don't know which one it is, but either people are really fucking stupid and, they're betting on XRP. Bitcoin is actually trash, and that's why people are betting on XRP. Or, I don't even know. I mean, there's countless scenarios, and most of them involve a bunch of really fucking stupid people buying a really shitty asset. Is it scary that Bitcoin chart looks worse than XRP? Is that scary? I think it says a lot for how stupid people are, but I don't think it actually says anything like necessarily bad about Bitcoin. I mean, Bitcoin's definitely weak trash right now. I mean, we've been hanging out at the lows for months. We didn't even get back up to the 200s. I mean, how pathetic is that? Even the trashiest, most garbage assets, like XRP, backtest the 200s at some point in time and then get rejected and go lower. Bitcoin can't even do that. No one even cares about Bitcoin enough to try to push it back up here to attempt to save the bull trend. I mean, that is absolutely pathetic. Crypto is pathetic. It has lower volatility than the stock market. Everything we loved about crypto, it's decentralized, it's independent, it's, no counterparty risk, it's digital, it's store of value, it's the transactions, it's the internet. Okay. Doesn't look good to me. Sure, okay. Below the 200s, we're at the fucking weekly lows. The lowest lows we've ever been at this cycle, and we're just hanging out at them. That's good, right? Yeah, because we haven't broken down from them yet. We're just putting in a bottom right now. We're putting in a floor. Bitcoin will never go below 19,074. See, it's at 19,077. I told you. 78. It's happening. These people are so fucking stupid. It looks terrible. I mean, we're just one candle away. Here's our candle. This is it. Pray to the candle. You guys know. The November 2020 candle. It's our candle and savior. Or our Lord and candle. It's all up to this little guy. Because if he breaks, we're at 14K. So go on down to, Kinko's and have them print you off a poster of that candle. Hang it up on your wall. Put a little crutch next to it because it's literally holding up the entire market. Ethereum on the daily. Just, this looks a lot like Amazon. It looks very much like Amazon. We're basically just one step off the bottoms. I've talked about this quite a bit. Stocks and cryptos that look like this are at a huge advantage because if we do get that capitulation event on Bitcoin and all the ones that are at their lows, there's no support. We're just dumping through support levels, just bloody waterfall down to 14K or whatever, 10K, 16K, whatever it is. Ethereum can drop like 20 or 25% and still not put in a new low. So it could be down at 1,000, even under 1,000, but at least it's holding on to support if it has that capitulation event. Doesn't seem likely to me that Bitcoin goes down 25% suddenly. Let's say the markets just start dumping. It doesn't seem likely that Bitcoin's going to go down like 25% or, whatever. Let's say it goes down from 19 to, let's say, 16. 20+%, whatever, somewhere around there. That puts Ethereum back at 1,000, still at support. So that's good, while Bitcoin's putting in new lows. Now, is Ethereum going to be able to turn it around then and go into a bull market? Probably not, but at least it's not going to 600 or something right away. I mean, probably eventually, but total market cap on the weekly looks like trash. Below the 200 simple, 200 exponential has negative slope. Below the 8, below 21, everything looks trash. The trashiest trash to ever trash. Total market cap, crypto, 761 billion. We already tagged once. That was a key level. Seems likely to come back down to that level. I'm going to tell you right now, if we break down now, we're basically confirming into the bear market because the 200 simple is very close to flipping bearish. So this does not look good to me. This looks terrible to me. Bitcoin dominance, this is everything. This is Bitcoin versus the shit coins, the stable coins. And you're like, does it include Solana? I said shit coins. Well, what about Ethereum? I said shit coins. It's everything. They're all shitcoins. People are like, well, according to Coin Bureau, shut the fuck up. They're shitcoins. Bitcoin dominance on the weekly, everything included. We're seeing Bitcoin start to build strength. We have momentum, hard buy, come out of bearish control zone, trying to reclaim the 21, trying to get the bull cross on the weekly. If and when that does happen, we're probably coming back up here like 47% to test that. Now let's look at it without the stable coins. Oh, it actually looks much, much stronger. So if the stable coins make the chart look less strong right here when they're involved, aka we take out the stable coins and Bitcoin looks stronger, it means that there's a lot of people sitting in stablecoins, and we know what that means. They're either out of crypto market de-risked and they're just not taking their money off the exchange, so they're just leaving it in stablecoins, or they're speculating on dollars because the DXY is strengthening, and it's a cheap and easy way to digitally speculate on dollars with super low or no fees. Well, that makes sense. So like if you were living in Turkey right now, you know, your main two choices to fight the massive inflation and ridiculous ass shit going on over there, because of, you know, retards in charge, you know, your two choices are either, you know, your three choices are keep getting fucked in the lira or run out and spend it as soon as you can. You know, you get paid on your lunch break so you can go spend your money, come back and work another half day, because by the time you get paid for the half day at the end of the day, after your lunch break, you can buy 20% less shit, you know, or 10% less shit, because inflation is so damn bad. You have to pay people multiple times a day because inflation is so bad. So that's your choices. Either, you know, stick with it and just say, well, sucks to be me. Or you can buy gold, you know, old store of value, holds up well. You know, it's surging compared to the lira, obviously, this year. Holding up pretty well to most currencies. Or you can buy Bitcoin. You can buy stable coins. You buy dollars. Speculate on them. Makes sense, right? The lira is down like 50% compared to the dollar in the last year. So every time you bought dollars, you saved yourself 50% or, you know, profited off of your decision. So it makes sense that this chart would stay stronger. And this is confirming into a bull market. You know, well, 821 at least on the daily. So this tells me that one of two things is going to happen. We're going to have a big up move soon, and Bitcoin is going to outpace the altcoins, or we're going to have a big down move soon, and the altcoins are going to get wrecked, and Bitcoin's going to go down less, percentage-wise. We don't know which one's going to happen. Could be wrong, but pointing to something. All right, so got a couple more assets here. What time we got on the stream? 52 minutes, looking good. Hex Evolve, what's up, brother? Good to see you. Milligan in the house, good to see you, my dude. Hex Evolve says, should be the next Prime Minister of the UK. Yeah, right, dude. The next Prime Minister of the UK. I'm not the guy who's like, as a plane is crashing out of the sky, it's been shot down, it's missing its wings, the engines are on fire, and everybody else already bailed out, and they're like, hey, you want to try to fly this thing? No thanks. I'll pass, UK. Good luck. Yeah, that country is about as fucked as it gets. Yeah, I mean, Europe in general, fucked. You know, and I'm not like trying to hate on Europe or the UK or whatever. It's not like the people's fault that trash people have run it into the ground. I mean, obviously we know the European Union is a failed experiment. The UK, you know, and the whole Brexit situation is basically them acknowledging, hey, it's a failed experiment and we're trying to get off this plane before it crashes into the ground. The problem with the UK is as the EU is crashing, the plane is shot down out of the air, the engines are on fire, you know, the UK is like, oh my God, this plane's going to crash. This is terrible. This sucks. Like, we should get out of here. And so they like strap on their, you know, their parachute, and then they jump out of the plane, you know, and then as they're like crashing to the ground, as they're like falling, free fall or whatever, they go to like pull their parachute string and they realize, oh wait, this isn't a parachute that I have strapped on my back. You know, it's just a regular old backpack. So that's what's happening in the UK right now. They jumped out of the plane's on fire, it's shitty. They pulled the parachute, ripcord, and it turns out they're just wearing a regular backpack. So I'm sure everything's going to be fine as long as, God himself scoops the UK out of the air before they hit the ground at terminal velocity. So as long as you believe in saviors, UK should be fine. So, obviously my opinion, my long-term scope is, the euro is going to be trading below the dollar. The pound's going to be trading below the dollar. And eventually they're both going to be as close to value less or less valuable as possible. Not good. Two massive failed experiments. And people are like, well, you're just being mean. Well, which one is it? Okay. Am I mean to the Allies? Do I only like the USA? Do I hate the UK? I mean, it's like the same bullshit complaints, everything. I'm like, how about it's just reality? How about it's reality? The whole, European Union allies with the United States, obviously. What was the point of the European Union? Basically, all the European countries get together and dethrone the dollar and take over, become relevant. Well, how did that work out over the last, 20 years? Well, it failed. It failed, obviously. And now we're watching it spiral downwards. And the UK has bailed out. They jumped out. How's that going? Not good. So, what's the truth? The truth is, it's the difference between what's actually happening in reality and what people want to happen or you think should be happening. That's the big difference is. The problem right now is the perception of what should be happening compared to reality. People have this fucked up perception of what's going on. They have a perception of how bad the dollar is or how terrible the United States is or, how it's all going to come to an end. But what they don't realize is that their perception is off. Therefore, the conclusion they draw based on that perception is also off. Which, goes back to the whole cleanest underwear in the bin. Or in the laundry, Sure, you put on the cleanest pair of dirty underwear. Sure, the dollar is strong compared to all the other dirty underwear. But it's still dirty underwear. It's still fiat currency. It's still garbage. So gold is next at the lows. I mean, we didn't take out the low right here yesterday. Congratulations. We didn't put in the lowest low of the entire cycle yesterday. But we were within like pennies of that. So I'm sure today is the bottom. I'm sure that's it. It's done. Trying to build some bullish divergence. Gold looks like shit. We already know. When we go to the longer time frames, what gold has to do to not look like shit. It has to reclaim the 200 exponential and simple. So it needs to get back above 1700. Well, does it look like it's going to do that this week? No. It looks like an indecision candle. Okay, what about the monthly? The monthly surely must look good. Oh, okay. So we just confirmed the 821 bear cross on the monthly, and we're at the lowest low of the entire cycle on the monthly. We just went on a massive bull run, and then we saw distribution double top, and then we broke down from key support and put in a new lower low. And the chart just coincidentally looks exactly like it did back in 2013 before we dropped another 40% and went down to sideways for another, 10 to like 14 years. Coincidence, of course. It's coincidence. Everything's fine. I don't think it was 10 to 14 years. What was it? 2013 until we took it out again. 2020. So 7 years. 7 years. Sorry. Exaggerated there a little bit. This doesn't look good to me. Everything about this chart looks like shit. We break down below the slope line. We back test it. We get rejected. Capitulation. 821 bear cross on the monthly. We break down below the slope line. We back test the slope while it's blue. Get rejected. Go down. We're below the zero line. All red histograms. Hard sell signal. 821 bear cross. I mean, it looks like we're about to do the same fucking thing again. So I will see you at $1,375 gold. And you're like, that will never happen. Okay. All right. I'm sure you won't be around when it does. So, because you'll probably be selling the bottom. You'll be like, gold is garbage. And I'll be like, I'll take that gold from you for $1,375. And you'll be like, good. It's a barbarous relic and it's trash. I'm buying XRP. XAG, a little silver, the old silver bullet, complete trash. We broke out of this resistance, got a little push up here, came back down, back tested it. We're trying to just not go to zero. Silver's like, oh, all I want to do is just not go to zero. And you're like, so you want to go up? And you're like, just anything but zero. I just don't want to be at zero. And you're like, congratulations. Let's start with reclaiming $20. And then we'll see if silver's good again. Oh, no, it's not. Okay. GSG, Commodity Index Trust, GSCI, commodities and energy combined. We see what's going on here. Energy, oil doesn't look terrible. Nat gas doesn't look terrible. Other forms of energy also don't look terrible. And yet here we are a commodity index with a heavy weight on energy doesn't look good. So obviously commodities prices are coming down substantially. You know, the whole bubble has popped. Lumber has completely come back down. You know, well, I shouldn't say all of it has popped. There's still a lot of things well off of, you know, the previous normal levels. But what we're seeing is, you know, this whole commodity super cycle bull run narrative has all imploded. Why did it implode? Well, because timing. I don't think that commodities don't get more expensive in the future. I don't think that we're not going into a commodity super cycle bull run, whatever. I just think that people were late to the initial bull run. Hang on one sec. Yeah, that's fine. A couple more minutes. Yeah. Okay. All right. Sorry about that. So yeah, I mean, we see basically what's happening is we're getting dragged down here. Energy prices are holding us up. Commodity prices are going down. And the truth is, when it's all said and done, you know, one of them's going to win. So if we see weakness in energy, this is going to fall off a cliff, go into a bear market. If we see strength in commodities, you know, there's potential that we reclaim this bull market and continue to the upside. But right now, it doesn't look good because we know, obviously, if there's slowing in the economy, if energy prices continue to go to the upside, it's going to likely drive down commodity prices because there'll be less demand for them from the high prices. So there's so many things fighting for control right now. And the truth is, the majority of the results, regardless of what wins on a single asset or asset class or whatever, the majority of the results point to the same place in the end. And that place is, you know, honestly down. Less economic growth, less people going out the risk curve. And, you know, what's going to happen to stock prices? Honestly, what's really going to happen to stock prices if bonds are paying, you know, 4% or 5% or 7% or 10%? You know, the big narrative for the last like 10 years was this whole TINA narrative. There is no alternative. You know, AKA, there's no way to make money or preserve your wealth cash flowing. So you have to take risk. And that's where stocks come in. So if now all of a sudden, obviously bonds are still getting wrecked right now, but the reason existing bonds are getting wrecked, the reason the second party or like, you know, the paper trading bond market is getting wrecked right now is because you're locked in at shitty rates and the rates are constantly going up. So eventually, at some point in time, the bond market is going to, you know, bottom out or rates are going to top out. At which point in time, you know, even if it's not the exact top or whatever, people are going to move a lot of money back into bonds for the, you know, risk-free fixed income. And that's all that money, all that wealth going back into bonds or going into bonds for the first time is coming out of risk-on assets, crypto, stocks, whatever. And the fact of the matter, when it's all said and done, we need, you know, the whole stock market, call it a Ponzi scheme, call it whatever you want, but we need higher stock prices. We need more investment over time to constantly elevate the stock market. So we need more people or more investments or, you know, more hype, whatever it is. We need more. You know, basically the definition of like a pyramid scheme or a Ponzi scheme to maintain these levels. Well, how are we going to do that with falling demographics? How are we going to do that with increasing, you know, all this uncertainty and everything going on? It just doesn't seem likely. And then on top of that, you take it and say, oh, well, actually, rather than just going for like the, you know, historical average of 6% in the stock market or the, you know, recency biased average of 12% in the stock market or whatever, I'll just take the, I'll take the guaranteed, you know, 5%, 6%, 7% bonds. All that money never goes back into the stock market. All those boomers retiring, it just does not bode well for future prices. I think the worst thing that you could possibly do right now is compare what something was priced at a year ago or 2 years ago or whatever to what it's priced at now. because the truth is so much has changed. We're not even comparing apples to apples anymore. So LNG is next. Cheniere Energy, obviously back at the highs here again. This still does look very, very toppy to me, but it is hanging out. If we do break out to the upside, by all means, I think this thing can surge. But realistically, until we break out of the ascending resistance, the broadening wedge, likely we're headed back down here to the lows. Mosaic Fertilizer. We're just at the 200s right now. There's not a lot going on in these charts. A lot of these are just deciding right now. And the truth is, when you consolidate at the 200s after a long bull run, technically the bias is still to the upside. Percentage-wise, historically, you're more likely to break to the upside. But with the moving averages and what's going on here, it looks like we're getting ready for another leg down on these things. It looks like basically distribution taking place. URNM, just a series of lower highs and lower lows below the 200s, confirmed back into a bear market, likely coming down here to test the lows around 55. After that, probably a new low. CCJ trying to push back up here. We do have that gap, potential gap fill back up to like 25. CCJ held stronger for a while. I think it's probably going to stay stronger than most uranium stocks. But I don't know. We'll see. Earnings probably going to be decent. Probably see a little pop off that. Maybe that's why we're staying strong, is leading into earnings. Fact of the matter is we're below the 200s. So it's very difficult for me to get bullish on these things when they're just chopping sideways below the 200s. Tilray and pot stocks starting to have a little upside potential here. A little bit off the lows now. I'm starting to get a little bit more bullish short term for a scalp move on these pot stocks. Now, I don't know if we're going to get that 33% move. I really don't, but that's what I'm looking at. The 821 have crossed back up here. It's like 30 to 38%, depending where we go to. 30% just backtest that previous high. 38 to 50 backtesting the 200s. We have the last like 3 times. Here we hit the 200 exponential. Here we didn't make it to either one. Here, obviously, we didn't make it to either one. So I would count on the underperform. But like $4.50 is still 30-something% to the upside. So I think as long as this 821 stays decent, as long as the histogram is above the slope line and the zero line, I don't necessarily think the bottom is in for Tilray. And not every one of the pot stocks looks the same as this. But I'm going to go ahead and put a little risk on with this one. Haven't actually taken a new position yet on Tilray, but I'm going to go ahead and risk on just a little bit here. Start dipping my toe. See what happens. I think there's some potential for a possible, at least relief rally in these things. I mean, this thing's been getting just straight wrecked for so long. I wonder if we can get a decent little like channel out of this. Let's see what's going on here. Maybe more like a wedge. It looks sort of like a broadening wedge. I don't know. There's probably a couple ways we could do this. We could do a little bit of a deep dive on these pot stocks. I do intend to do some of those static videos this week. So I think something like that. And then on the bottom side, something like that. So realistically, we're just trading in this range as we just slowly creep lower. We're obviously at the point where we're closing lower weekly close than we've ever closed before. Literally pennies off of the lowest low ever based on this wick back here from 2020, the Rona low. Macro, when we really look at this thing, we have a high, we have a low, we have a lower high, and then arguably we have a lower low, same low, whatever. At some point in time, we're going to get a pushback up here, and it's probably going to be a pushback up to another lower high. Maybe we break out eventually, etc. But the fact of the matter is, we have a high to a low, and then from here, we retraced 61.8% of the way. Let's not count this massive wick and just say it was a 50% retrace. So from the high to the low, we retrace 50%, then we keep going down. Obviously, the wick is there. I don't like to just ignore data points, but it's not super, super technical. It was obviously, fueled by some like FOMO, whatever. So if we get another push up here, it's pretty simple and doesn't have to happen. But I would say realistically, if we just take from, we should probably take from the high to the low the same way we did from the peak and see what like a, I'm going to just take that one off there for a minute and see what like a 50% move would look like this time. Like let's just say, I know it's like not very, it's not like super reliable to just be like, well, we did this last time, so we'll probably just do it again. It doesn't have to be like that, but obviously we can get an idea what would happen. So let's take a look at that. So we're going to look at the yellow one now. So if we came back up on the orange one to the 50%, so next bounce, let's just say we did bottom. Let's say we did confirm the bottom right here and we're about to get another bounce up. The 50% move of just this move, the same way we had a 50% move of this move, and that was this peak, a 50% of this move, which would be our potential next peak, would take us up to 1339. 61.8, aka the 200 exponential and simple on the weekly, would be like 20 bucks. So let's just say we come to a 0.5 at 1339. We're talking about basically a $10 move, which is essentially, that's a pretty beefy move up there. Does it have to happen? Is it going to happen? Does it underperform and only come back to this blue level? Does it overperform and hit the 618? We'll have to wait and see. But, we're talking about a 300% upside at this point in time just to put in another lower high. So if we're talking about 300% upside for another lower high, what are we really looking at? With stop loss at 264, that's a monster stop loss. So we obviously don't want to go for a new low for the stop loss. But even if you were going to do that, you're talking about 22% downside versus 300% upside just if we put in another lower high. That's not even like, oh, what if we go to new all-time highs? Let's start small. Let's just say, what if we don't put in new all-time lows? So let's just say you were like, all right, I'm convinced I'm going to come in and buy right now. If we put in a new low, I don't want to be in this trade anymore. 21% loss. But obviously the target to the upside is the 0.5 right here. 289% upside target. So 13.5 to 1 risk reward ratio. So you bet $1. If you're right, you get $13.50. If you're wrong, you lose your dollar. It's a pretty good trade right there. 21% downside, aka risk. 289% upside, aka reward. Pretty juicy right there. Now, is this going to play out right now or is it going to fail again? It probably fails again. It's just getting wrecked over and over again. What's the likelihood this is the low? We've seen so much bullish divergence in these things and they just keep grinding lower. We've seen so much potential for upside and they just keep grinding lower. But at some point in time, we have to say, okay, either Tilray one day gets back up to $10 or it goes to zero. Which one is it going to be? I don't know. We'll see. What time is it? 12:16. I got to wrap up in like 15 minutes probably. Maybe less. Alibaba. New lows today. The lowest low of the cycle. Just completely wrecked. Coming up on earnings. So is this probably getting wrecked because earnings are terrible? No, that would be insider trading, obviously. So that can't be true. That would never happen. Yeah, this is just fucking disgusting. You got to just assume these things are going to go lower until they don't. Somebody was literally talking about, China stocks and Snapchat, and these things are at great value levels and they look amazing and da da da. If somebody says when they see this chart, the Snapchat chart or the Alibaba chart or whatever other chart it is, if somebody looks at this chart and says, this looks amazing, this is the buying opportunity of a lifetime, and you say, why? And they're like, look how far down it is from its highs. You haven't been able to get a deal like this since 2016. Oh, okay, that makes sense. So it's on sale massively? Yep. And you haven't been able to get a deal like this since 2016. Yep. And what, the earnings are way up from 2016? Uh-huh. Oh, okay. So it was overvalued then? No. Was it undervalued now? Yeah, of course. Oh, okay. So was it overvalued then and now in comparison to overvalue, it looks like it's undervalued? you can't use these valuations to try to figure out, what's a legit level. Because look how many nasty red candles there were, and there's people trying to call the bottom the whole way. I mean, I remember this. This was the bottom. Everybody was, this is the bottom. This is the bottom right here. And I was like, it's a dead cat bounce for sure. It's a playable bounce for sure. Went from 72 back up to, 125, almost doubled, almost 100% moved back up here. And now where are we at now? New low. A new low. So even if you do buy the bottom, you're right for a little bit until you're at a new low. This chart looks fucking terrible. We're like, let's just say we have just an average monthly sell-off candle, like the last average monthly sell-off candles we've had for years. This thing peaked. Keep in mind, this peaked October of 2020. So when I say years, I'm dead serious. Like 2 years ago, this thing peaked and it's been getting wrecked. And we've been shitting on Chinese stocks the whole way down. Okay, and I don't hate China or anything. I have, Chinese family members. Okay, I know people are like, "Oh, you're racist because you said made stuff about the China." Oh. Talking about the stock market or the Communist Party, okay? Not like actual people. So anyway, let's just say we get one of these average red candles, just one of the other 20 something that we've had over the last 2 years. What is there, like 6 green ones and 18 red ones? Let's just say we get one more average red candle. We're at the lowest low we've ever been. We're one red candle away from the lowest low ever. I don't know. I guess I just look at these charts a little different than everybody else does. I look at reality and they look at, I don't know, whatever the fuck they're looking at. Neo, same thing, lowest low. Again, sounded crazy when I was calling for that, $8 Neo a while ago, especially when it was in the 20s and people were like, no, it bottomed, it's getting ready to break out to the upside. And I'm like, oh, okay, yeah, I'll see you at $8. Well, we're at 11, so we're closer to the 8 than we are to the 22. So I was right, just not all the way yet. I'm only 90% right so far, so hang tight, though. 10%'s coming. All right, so on to everybody's favorite, Snapchat, rather. Why does this trash stock always gap down? I have no idea. Honestly, the earnings weren't even that bad. Let's look at the earnings right here where we gap down that last 30% when I used this thumbnail. Sorry, it was borrowed, so. So the surprise was for earnings, it was down 26%. They lost 26 cents instead of 20 cents. So they're a loser and they lost more than they were expecting. And we gapped down 30%. Okay, that makes sense. I can see that. Surprise. Revenue was 1.111 billion and the estimate was 1.137 billion. So 2.3% miss, 26 million miss. So 26% and 2%. So let's look at these earnings. And I know you're thinking, well, that's green. That can't be bad, right? Well, the estimated loss was 24 cents. And then the reported loss was actually only 22 cents. So they lost 9.2% less than they expected. So they're still a loser, but they didn't lose as much. So technically that's a beat. They expected to lose a bunch. They only lost the majority of a bunch. That's a beat. Good job. And then revenue-wise, 1.128 billion, and the estimate was 1.1438 billion. So they beat earnings by 9%, but they missed revenue by 1.28%. And then they gap down 30%. That doesn't even make sense. If anything, you would think, well, actually, that's not really that bad. I mean, sure, they're having some trouble generating up a little bit of revenue. Sure. But I mean, a 1% miss versus a 9% beat, gap down 30%. So what about a big miss? Who's going to be the company that misses big this earnings and gaps down 30% or 50% or whatever? Just have to understand that as long as these markets are in a bear market, even good news or decent news or okay news is all bad news. Everything is bad news, including bad news. We took out this low right here. That was a massive, massive support level. So we just took out the March 2020 lows. Snapchat is officially cheaper now. It's less expensive now. It has less value than it did at the bottom of the March 2020 crash. Not a lot of things are pulling that off, but Snap's doing it. So congratulations, Snapchat. And if you're one of the people that bought at $80 or rode it up to $80 and didn't sell, It's not that bad. You're only down 90%. That's not that bad. You've only lost 9 out of every $10 of yours. So keep it up. Stick with it. Just hodl. Hodl it away. If you told me like, hey, I'm an investor, and I was like, oh, sweet, what kind of investments are you in? And you're like, well, I've got these $10, okay? And I put them away in a safe investment, and it's not doing bad so far. Thinking about doubling down. I'm like, really? Doubling down? What are you investing in? Oh, Snapchat? Okay. So how much is your $10 worth now? Oh, it's worth $1. So like when you double down, does that mean you're putting another dollar in, or are you gonna put in another 10? Oh, okay. So you're just gonna put in another $1. Yeah. Ah, okay. So you lost a $99, 90%. And you're gonna put in one more dollar. Huh. Okay. All right. Hodl, I guess, and then just dollar cost average into a downtrend. Okie dokie. I mean, they were literally on CNBC today at $8. You had this retard saying, "This is an amazing deal. You should buy. $8." I mean, it's down another 60 cents since then. It's like down 8% since that guy was saying buy. And those same people were saying buy here, 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 buy here. Whole way down. So, please be careful who you're listening to. This market is full of brain dead idiots. Please don't be one of them. All right, so jump back in the chat here real quick. Hexavolve. So can we look at HDRN? Scraping the bottom of the barrel here in the UK. Yeah, you guys are struggling, man. I feel real bad for you guys, honestly. It's like when you start considering bringing Boris Johnson back, for another run at it, you're in trouble. So. On Uniswap, I'm guessing it's probably the best option. All right, so let's take a look at Hedron. In like 2 seconds, I'm going to grab a drink. Refreshing. All right, so we have no actual history on this on Uniswap. This is where it basically became available, and that's the price we're at right now. So we're not far off the highs. We're obviously well off the lows. So the real question is this going to be able to put in a new higher high right here? Well, let's look from the high to the low. We see we came up above the 786, shot up here, but we did put in obviously a lower high based on closes as well. We are consistently putting in higher lows. Since this consolidation, though, we have put in a lower high. So the real thing to look at is we had a pretty strong uptrend, clearly, and then we lost that uptrend here. Corresponds with the 821 bear cross. We came down, though. We did put in a higher low still, and then we moved up. Now the problem is now we've put in a lower high as well. So the natural thing to do is to draw a line from here to here and say, okay, if we break through this descending resistance, likely, this flag consolidation or triangle, whatever you want to call it, has broken to the upside, and we're likely to get, measure move continuation from there. Now, the problem is, we have 2 data points and a technical breakout right now on this daily. If this was the route you're going to take and you're going to say, okay, we broke out from this, what I would do is I would just look for the easy way. Okay, you're like, oh, we broke out right here. So do I buy now? Do I buy on the back test? Is it too late to buy? Like, what do I do? I would just look at the easiest way to look at it and say, okay, this is our previous high right here. We obviously have this high, then a low, then we have a lower high, then a higher low. So we're doing a, neutral consolidation after a bullish run to the upside. So what I would look at is we're literally a couple, I can't even say a couple pennies. I mean, we can't even denominate this. So let's just skip the 0.0 blah, 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 blah. And we'll just look at the actual number part. So right now we're at 42. This is at 44. So if we close a daily above 44, 44476, aka a new daily high above this, you could look at that and say, okay, we're confirming a breakout from this. We're likely to get the measure move of the pattern, which is probably going to take us back up here to retest this lower high. If we make it back up to that lower high, we're probably going to retest the all-time high, at which point in time there's an opportunity. Now, alternative scenario is that obviously the bullish situation doesn't play out. We break down from here, which seems like, again, pretty technical breakdown. It would be a retest of the 200 exponential and simple, or the macro 618. So it would be like a 32. Well, we can draw from the bottom right here to the top right here and then say, okay, what do we look for to tell us that a trend has topped out? Well, the first thing we look for is super simple. We look for a pullback to the 236, telling us we likely have topped out. So from the low to the high, we came back down, we back tested the 236, then we put in a lower high. So to me, what this looks like is probably going to happen. Take away all the statistics, the probability of, a bearish versus bullish breakout, et cetera, et cetera. Take all that shit away, and I'll tell you what I see right here. We moved to the upside. We lost the trend. We tried to push back up here again. We failed to put in a new all-time high. And if we don't put in our new cycle high, whatever, if we don't put in a new high very, very soon, after a dead cat bounce off the 236, we're likely going to the 382. So what I'm looking for is 382 is my target, which is 16. We're at 42. So that's really, really low in comparison. Now we could look at the 618 here in yellow and say, well, we're probably going to get a reaction off that and the 200s. But the truth is, we've broken out right here. If we take out this high, we probably go up to retest the highs and go much higher. But to me, probably what's going to happen is we're probably going to top out at the 618. So if we take from the high right here to the low right here, and then we say, okay, what would a 61.8% retrace look? Oh, okay, we already did it. We literally already fucking did it. So from the high right here to the low right here, we literally bounced 61.8%, and that was our top. So that's it. So what I was expecting to happen before I pulled this up already happened. Therefore, if we take out this 618, got to be bullish. Got to. Took out the resistance, took out the previous high, and, took out 618. So we start looking at 786, the previous high, the all-time high, and then new all-time highs. So if we don't take out 618, likely I'm correct about what's going to happen here. If we do, we likely go much higher. Which one's going to happen? I don't know. I'm still, I would say bearish bias still on this. I would look for bearish divergence. If this pushes up here and either the indicator oscillator goes higher and the price doesn't, or the price goes higher and the indicator oscillator doesn't, I would look at the bearish divergence on the daily right here and look for potential there. I have a feeling this is going to get rejected right here and roll over, and then we're going to come down first to the 236 and then to the 382. So the truth is, technically, is there potential here? Yeah, there definitely is. There's definitely some potential here. But where do I think price action is actually going? I think price action is going to go to 0, almost infinite, and then 1.6. So it's going to basically just go closer to 0 than it is now. But again, that has nothing to do with fundamentals. I don't know what Hedron is. None of that shit. I'm literally just looking at this chart and telling you, the targets to the upside. Can we build a potential trade setup off of what we just discussed? It's going to be difficult. It's going to be difficult because let's just say we retest the highs right here. We're talking about 44% upside. And if we go to my lows on the downside, 62%. Now you're like, well, I'm not going to just hodl down 62%. Okay, sure. So let's just say if we take out these lows right here, you get out. So 22% stop loss, 44% upside, 2-to-1 risk reward ratio. We're above the 200 exponential and simple. It's an acceptable trade. But the truth is, why not just wait? Why not just say, hey, look, if the daily just closes a couple pennies higher, the stop loss 24%, the upside is 40%. It barely changes it, but you get a lot more probability of it playing out if we close above that, a bunch of zeros and then 445. So that is Hedron. All right. Hexavolve says, good that I hedge myself, dollars instead of pounds. 100%. 100%. Well, and think about how few people, everybody's like, everybody's on the side of the dollar. Everybody's betting on the dollar. Everybody's on the same side of the trade. Are they though? Because I'm pretty sure literally everyone you hear from is like, this is the best time to buy said X currency, this trash currency. Oh, the Japanese yen's at an all-time low to the dollar. So that's a buying opportunity. Or there's a reason it's at an all-time low. Well, the gold British pound is at an all-time low compared to the dollar, and this is a buying opportunity. They're trading in almost parity. Well, sure, because the fucking country's falling apart. Well, what? But the euro is trading at parity to the dollar, and that's just the best buying opportunity you can buy. Sure, because Europe's fucking falling apart. I mean, I know this is an international community, and I'm not trying to be a hater on, Europeans or, UK or any of these places. But look, I'm going to tell you the truth right now, okay? And people aren't going to like it. All right? And I'm going to tell you the God honest truth. Life has not changed that much in the United States with all this inflation and this, that, and the, oh my God, it's fucking terrible. Like, okay, sure. Like, my health insurance went up some. Okay. My, car insurance went up some. Okay. There's inflation on some of the stuff I have to buy. Okay. And gas is up, double in the last couple of years. But double is the difference between it being, $2 a gallon and $4 a gallon. Like, it's cheap as fuck. Who cares? Like, I get it. I know. A lot of people were living at the maximum of their means or well above their means. And this is extremely stressful on them, and it's horrible, and they're going to lose all kinds of stuff, and they can't pay their bills, and the repo man's coming. I get it, okay? But if you want me to believe for one fucking second that nobody can afford rice and, beans and cabbage, like people are literally starving to death, I don't believe it. I don't fucking believe it. Not in the United States. Some places, sure. I do not fucking believe it. As long as you can buy pounds of rice for a couple dollars and, a cabbage for a couple dollars, I don't believe that people understand what an actual, I get it, okay? And I know I sound like a dick or whatever. You're like, well, just because it doesn't affect you, da-da-da. Don't live above your means. It's super simple. Don't, invest, quote unquote, with money that you don't have to lose. Don't speculate on trash bag cryptos and garbage stocks that don't make money. Stop trying to buy a fucking lottery ticket. Either invest or buy a lottery ticket. Or you can invest like you're playing the lottery, and that's completely fine too. But understand when you buy that Snapchat that that's a lottery ticket. You're buying a lottery ticket. You are spending that money knowing that you're going to lose with a very, 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 very small bit, tiny bit of hope that you could get lucky and win, but you're not going to. And that's the difference between actual investing and gambling. I love to gamble. It's super fun. It's exciting. But there's a difference between gambling and investing. Do sometimes I gamble on stocks or cryptos? Yes. But it's not as fun as gambling on, casinos or fights or whatever. So just understand the difference between, reality and, what you're claiming is reality. But that's it. We're going to go wrap it up there. I got some shit to do. Some previous commitments. Hopefully everybody had a good stream, enjoyed it. I appreciate everybody tuning in today. Going to go ahead and wrap it up there. Yeah, that's it. It is Friday, 12:37 p.m. Eastern Standard Time on 10/21/2022. And as always, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Better smash that like button. 3 fucking likes. Wow. Pathetic. Damn. I might have even liked it myself. So really, it's 2 likes. No love, let alone likes from you guys. Man, that's harsh. But I'm just kidding. I'm out of here. So appreciate everybody. Obviously, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Everybody have a great weekend. We'll see you on the Sunday evening market look ahead. Obviously, watch out. Could see a, looks like it's going to be a decent close probably for the stock market. Still plenty of hours left in the day though. So never know when that late day reversal is coming. But that's it for today. We're wrapping it up. Everybody have a great one. Peace.